We're going to get some numbers out in the nenext few moments. Globally, still probably the best year ever. We'll see what the run rates are.
Yeah, I mean, I know that Phil gave you some projections. He's never bet against Phil. But I would say this, that the GM declines seem overdone. Stock's just been terrible.
Really?
Seems overdone to me. They spent a lot of money on the future. Phil's been covering that very well.
They have had some upgrades, I mean, based on what they call a seat at the table
Right.
regarding mobility.
But it still sells at 5-6 times earnings. I mean, Micron sells at 4 or 5 times earnings. I thought the market's expensive, but you know, GM could raise the dividend a lot, and I wish that they would, because I think people really want income right now. I mean, you know, the stocks of Verizon's only 4.5%. GM could offer you a very good dividend, and I think that that's exactly what the market needs right now.
Phil earlier this morning said even though we're likely to see total sales down from last year, which was barn burner of the year, still probably one of the top 5.
Yeah, and I think that CarMax is going to be good. I covered that last night. I feel that some of those stocks represent great value. They're buying back a lot of stock. But you know what? The fact is that people are going to say down year versus last year, and they don't want to own when they have so many stocks up because of the tax reform.
Right. Let's get to Ford, which will lead the charts as usual. Phil LeBeau's in Chicago. Hey, Phil.
Hey, Carl. A little better than expected from Ford. A slight increase in December sales, a rise of 0.9%. The Edmunds.com estimate was for a decline of 2%. Remember, these are comparisons with December of 2016, which was a huge month. So the fact that we're not seeing blockbuster numbers does not mean a whole lot there. A couple of interesting notes. F-Series up 9.3%. We talk about trucks and SUVs. Best year since 2005. They sold just shy of 900,000 F-Series pickup trucks. A record December for SUV sales. And oh, by the way, when it comes to their inventory levels, they came down about 5 days, now down to 68 days supply, which is much closer to where they want to be. Really spot on with where the automakers want to be in terms of day supply. We'll get GM in about 10 minutes. Guys, back to you.
We'll come back to you for that, Phil. Thank you very much.
Remember Mark Fields? Remember Mark Fields? He spent a lot of money upgrading the F-150, and then he got canned. I bought an F-350, which of course is the Super Duty. I mean, the thing is like, you take that through it's like a Sherman tank. But the thing that people don't realize is that that was what Fields spent a lot of time on, and they wanted him to spend billions on on cars that are self-driving. He spent billions on trucks that people love. And those are big, high margins. Ford seems cheap to me if that number's worldwide. The problem is that Ford is worldwide, and they don't own China.
Were Fields and Oberhelman similarly squeezed out too early?
I mean, look, he got the dealer network all together. He got to rationalize the whole business model, and he's just off in the sunset.
Right.
I hope he's at that Rancho Valencia where I went to, playing some tennis. I like both those guys, and those guys got short shrift, and nobody cares. Well, I know, because they're rich, blah, blah, blah. I mean, they're rich. Remember what Lenin said, my great-great-uncle? He said that if the rich are unhappy, it's their own fault. So I guess we're not supposed to like these guys either. Lenin. There I go, quoting Lenin. I got a picture of Lenin on my phone.
It's a selfie, right?
It's a selfie,
okay,
selfie, absolutely.
Lenin.
But yeah, I mean, I look more like Lenin every day. But that's because I have to lose weight from that vacation.
Alibaba's Ant Financial Services affiliate has ended its agreement to buy payment services company MoneyGram. This after objections by federal regulators. The companies were unable to garner the approval of the Committee on Foreign Investment in the United States, which reviews acquisitions by foreign entities for possible national security risks. I haven't heard talk about CFIUS in a while.
No, I thought that this was his punishment. I mean, what, money orders, national security? I mean, look. I don't. I got real news, right? I mean, it's blocked, but and maybe there are some reasons why we really don't want this deal. But I think also China, get the message, China, get the message. You know, go help get us rid of North Korea. You know, this is Jack Ma. He represents China, and I think that Jack Ma would say, "What's going on?" Jack Ma's a politician, but as a businessman, he I think must sense. Wait a second, maybe we got to stop dumping steel. Because when we do these, we can't get anything done. Maybe we should stop dirtying the air and just take all of what Alcoa has.
So you think it's an effective shot across the bow?
Yeah, I mean, MoneyGram, that's a good thing. I mean, it's good for Western Union, too. But I just think that one of the things that the president's trying to say is, listen, we're going to do 232 on steel if you're not careful. We're going to make it a national defense issue. Notice the steel companies continue to go up. So this is the shot across the bow that I've been waiting for.
Welcome, guys.
He wants to shut down little guy. It's the Chinese that are in charge because they keep giving them food. So MoneyGram may translate into the Chinese saying, hey, you know, we got a real guy here. He thinks we're paper tigers. Maybe we are.
Wow, GE went up really nice from yesterday's trade.
When we come back, we'll get Kramer's Mad Dash. We'll count down to the opening bell. Take a look at the pre-market on this Wednesday morning. More Squawk on the Street from the NYSE continues in just a moment.
I'll probably get stuck to about the 48. Okay, VTGN. Let's rise right there. Why are you going up? VTGN. Okay, VRX, why do you have news? All it says their news is basically that they've been paying off debt. VRX. Looks like he wants to try to make another X in the MACD to go up. %.
7 minutes to the opening bell. Let's get Kramer's Mad Dash with all these upgrades, Jim. We have our pick of the litter. Which one?
I mean, Steve Miller's song is wrong. Take the money
It's
and
kind of resistance right now.
Fabulous guy. Okay, so 5 reasons to be tactically long. Oracle. Some Morgan Stanley. By the way, we have an upgrade too of IBM. I mean, this is like, hey, you know what? Look at me, I'm good. And it does talk about the positives of the last quarter. Now, in my conversations with Mark Hirsch, it is very clear that that last quarter wasn't nearly as bad as the market said. People didn't like the cloud disappointment. But you know what? Database is in full swing. You know, people, database is still pretty good. That maybe some of the cloud problems are behind them. But repatriation, likely to drive share repurchases. Now, they do a bond deal. They have a lot of cash.
Looks like we may make an X to go down there.
Amazing. This is an incredibly cheap stock. As is IBM. People keep saying there's no cheap stock. All right? No, it's the opposite. There are many cheap stocks that were valued. This stock, look, this is pre-tax reform. This is tax reform.
Yeah.
So, I mean, I just say, wait a second. Why put the hate on Oracle? I mean, I understand IBM, and I recognize the upgrade I like, but I'm with Larry Ellison for the moment here. And the stock was knocked down yesterday because fears that Amazon and Salesforce are going to drop them. Couldn't get that confirmed, Lester.
Target on Oracle's goes to 57. RBC's target on IBM goes to 180. And both of them say not just valuation, but either the database cycle in this case or the mainframe cycle.
I couldn't believe that no one talked about the mainframe cycle. I'm in love with the mainframe cycle because the margins are big, but Warren Buffett was a seller. And because that trumped everything. I mean, if Warren Buffett's a seller, who wants to buy from Warren Buffett? But maybe he's done. More important
couple big cap upgrades right there. We'll get the opening bell in just a couple of minutes. Don't go away.
Is there any? No, not too much there. Yeah, it gapped up. There's no real news on there. Let's check out. Which one should we check out? So right now I'm debating between VTGN and VRX. VRX is a little bit more expensive though, but VTGN is a lot cheaper and it's up already 12%, almost 13%. Of course we're going to keep our eye open for anything else that pops up. AMD went up a lot today though, 6% already.
Watching this tech rally that began the year for the NASDAQ. Budget is going to be the topic of discussion on the Hill as we are still facing this January 19th
Funny
shutdown.
how I started looking at a tech company and then they announce it in the news.
That's been historically a bad reason to sell. So if you sell, you may have to buy it back, which is not something I want people to do. In the meantime, we haven't talked oil rally, which is happening. Natural gas, by the way, don't get sucked in. Natural gas should be through the roof, but we have so much natural gas. A lot of that, thank you, Rusty Brazil, is Haynesville came back. Haynesville was this amazing shale that people left for dead. We got natural gas. We don't even know. We flare natural gas. Remember, that means we burn it because we have no place to put it. And we don't have enough export yet. Dominion, by the way, which is exporting soon, bought that Scana, which had big nuclear problems. But just be aware before you go nuts on the natural gas stocks because it's so cold. Stick with oil.
Yeah. 180 million Americans in below freezing temps. And I don't know if you saw yesterday, Google searches for the words frozen pipes are at a 3-year high.
Well, then I think that Home Depot, which was down yesterday, is a buy. I saw a downgrade of Masco. I think that's still timed. That's kitchen and bath. But
Okay, about 25 seconds.
Supply downgraded today because it's been so strong. I question that downgrade. I like the pipe business. By the way, copper, Freeport, people still use pipes that are made of copper.
And to Jim's
Excuse
point
me.
on oil, we just hit 16.94. That's a fresh 2.5-year high going back to June of 2015. There's the opening bell on the S&P at the bottom of your screen. And the big board today, the Warrior Dog Foundation, providing retirement for working canines. At the NASDAQ, Youngevity International, a direct seller of lifestyle and nutritional products.
I'm going on any lifestyle nutrition. I got Mind Body on tonight. It shames you into spin. I tried spinning. What the heck is that? I mean, Peloton, I love you.
I got to see that on camera.
No, my daughter wanted me to do yoga. I mean, that hurts me. We went to like a spa. You know, I spa with pina colada. You can't beat that.
Yes. That hip flexibility, though, right?
Oh, Mitch. I mean, honestly, I need mind and body.
We are coming off of not just, we talked about the NASDAQ at the top, but the Russell had a closing high. Transports had a closing high.
Russell is, you get tax reform. The transports are insane.
VRX is going up.
Because of e-commerce. But the rail, CSX is now above the unfortunate death of Hunter Harrison.
VTGN going down.
People feel that coal must be being burned off, so they're buying Norfolk Southern.
Bars are going up.
What you have here is people saying these are domestic and
Ooh,
they're going to benefit
look at that red all of a sudden.
And remember, again, I keep calling people's attention. We always, it was in the market. No, because the analysts hadn't upgraded. And the analysts are in control right now because we're in one of those moments where people are listening to them. People are looking for new ideas. IBM, Oracle.
IBM is leading the Dow, up almost 2%. GE's up a full percent.
GE?
Above 18.
A law was made at just a moon ago here that GE's not allowed to go up. That's interesting.
Yeah, but your point about the sell-side research is, this is their moment, I guess, right?
Yes, I mean, IBM, the mainframe performance, clients adopting the hybrid cloud environment, attractive valuation, that's all.
Twitter.
And I come back and I say, okay, this is what's going to happen. What is still down that I can buy? And what's interesting is that United Technologies is not down, but they're saying relatively it's down. That's a big thing that the analysts are using. Relatively something's down. And that's you can get caught up in that game.
Yeah. I saw this yesterday. Nearly half of the S&P are within 5% of their 52-week high.
That's unbelievable.
But there's still a lot that are 20% away, and a lot of them remain oil names.
And those are, and look, oil is a very tough situation because a lot of these guys have sold forward. You can't, we need growth. They may not have the growth. And I do think that at a certain point, people are going to say, wait, how much more can I keep paying for United Technologies? How much more can I keep paying for some of the stocks that have already run? I mean, I'm thinking, in this case, I'm thinking about Facebook, which my charitable trust owns, Netflix. I mean, Facebook was up 5 yesterday on nothing. Absolutely nothing. There was not a single note about Facebook. I mean, I understand Amazon. Amazon comes out and basically says everybody loves Prime. Shocker. But it doesn't matter. At least they had something.
Down.
Amazon, a lot of people dissecting what they believe the quarter looked like for Prime. Categories, furniture, beauty products on Amazon.
Yep, that's why Ulta's been down. That Wayfair, key downgrade by Merrill Lynch. Worried about competition, worried about the comparisons. So that could be under some pressure all day today. It's an expensive stock. I am looking at a lot of stocks in tech, though, where people are just saying, for instance, Micron. Micron reported a blowout quarter. Stock went up to 45. Did not take out its high. Then went down to 42. That quarter was below where it was when they reported the blowout quarter. Now it's starting to sneak up on that Semiconductor Industry Association number. Micron is key to this market because then you got Lam Research that'll go up, ASMLF that'll go up, KLA-Tencor will go up, Texas Instruments will go up, Analog Devices will go up. They're all looking at Micron, waiting for that stock to go up. Even Advanced Micro's up today. That's saying something, but that's also maybe because Dr. Sue's terrific and Intel.
2 cent movement, mainly there.
Brian Krasanich, I got to find out more about. He's the CEO of Intel.
Yeah.
Because this article, I mean, the article is basically saying.
There's no news to help move this.
I'm not going to. I mean, Intel, you may never come across this flaw. I don't use Apple. I use this thing, this Hewlett Packard. I mean, I kind of like it. It does this, I mean, does a lot of cool stuff. I can draw on it. I can be like Brady always uses it. I mean, B and Brian Wink, we're too old.
There's no news to help move this either.
You can do anything with this thing.
Your point about chips is great. Lamb, as you said earlier, ADM's up more than 5% this morning.
Good.
Along with some retail mixed in, Jim. Nordstrom,
Therapeutics.
People are talking about Nordstrom coming back to the market and taking private because the cash flow turned out to be better than expected. Now, is that going to happen? I got to tell you, Carl, if Scana gets a bid, there were a lot of people who felt that Scana could be in huge trouble because they can't finish this nuclear plant and the rates kept going up, then I'm willing to believe that anything. I mean, other than the consumer stocks, which are going down because they don't have what we need. They're international stocks. Yeah, they don't benefit that much. There's a Unilever story.
That one
today.
just
It was really
jumped.
fabulous if anyone got
Crazy.
It was really long. And it talked about smaller brands and what you have to do. Procter has to do that. Those stocks, I'm waiting for a Wall Street firm to switch Apple from tech to those stocks. You get the stock at 240, the average of Procter and Clorox and Colgate.
Right.
Goes to 240.
Right. That's not happened yet.
No, but it's a consumer product.
going up.
Listen, if Gillette has a battery problem, they give you a new battery, right? Hey, Apple has a battery problem, they give you a new battery. Okay, so you have to pay
Refresh
$100.
this.
I mean, geez. I like it.
Here you can see mountain up, but
The Intel news, it is lagging the Dow, and again, all we have is this one article making really broad-based claims about the quality of the product.
I remember Wade Andy Grove, who was absolutely sensational, and Only Paranoid Survived, one of the greatest business books I've ever read. And in it, when I spoke with them, they had a problem where if you use 9 digits, multiplied by 9 digits, multiplied by 9 digits, then you get a flaw. And I'm thinking, look, okay,
right now I'm looking to see how high it's gone up in the past to jump up.
So it didn't surface that much. This may not surface as much. Brian Krasanich is money. The stock is
62%, 65%.
As we mentioned earlier, financials, Bernstein did give an upgrade to UFC, and Nomura took JPM to 115.
Yeah, Machado Trust owns JPM, and I just think that JPM is going to be a core holding for a lot of people because it sells at 15 times earnings. I talked last night about how Wells Fargo has been going higher. I mean, there couldn't be a worse situation for a bank, but everyone's buy.
Yeah. We got Ford out of the way. GM is next on this day for auto sales. Let's get back to Phil LeBeau. Phil?
Carl,
So there's no news moving this though. That's my only problem right now. Like this.
Of last year versus December of 2016, which was a whopper of the year. In terms
And
of sales,
let's see
a
here.
decline of 3.3% is interesting when you look at their
Right now it's still before the 45-minute mark, so it's really dangerous to trade before the 45-minute mark.
Previous month, so they're clearing out that inventory.
So usually I don't like to trade before the 45-minute mark.
Sales rate for the
So
month of
we'll
December,
probably be waiting, but we're definitely watching this. Even though we can see it that it's trying to climb up right now.
The stamp that I think is particularly interesting. I think
Pretty good too.
people want to hear about this. Average transaction price in December
But
for GM over
it's not really that
$30,000.
safe
Think about that.
until at least the 45-minute mark, because we need to see a better pattern.
Guys, back to you.
Thanks, Phil. Jim's shaking his head. Yes.
Staggering. I mean, GM, you know the ripple effects of the autos doing well? I mean, you can just, you got soup to nuts. By the way, Johnson Controls, look at that one. Third of the profits come from batteries. You want pipes? I'm on Google batteries like 50 times, get that up there. But I want to point out that when you see GM doing well, think about the rails. When you see GM doing well, take out of the equation the subprime that everybody's so worried about. And by the way, this is just domestic. GM's got a big network, and they got out of a lot of the bad Europe. That's why I'm a champion of GM here. I just think that GM's doing a lot right, and you got a cheap stock.
Yep. Metals, too. You mentioned copper earlier, but platinum is on pace for a 9th day of gains. Those things all sort of blend together.
Jeez, and rebar, which is the basic substance of major buildings, article in the Journal today, page B3, I think, talking about how that rebar is going to move up because the competitor's been taken out. President Trump noticed that finished the dumping of China to get those stocks up, get more people employed.
Also just got some new Red Book numbers.
TEUM.
Sales up 5 year-on-year for the week. Up 5. Yeah.
Do people know how big this is?
It's going to take them.
Remember when Macy's, we were worried about the dividend? We were worried about the bonds? Now we're just worried whether it's going to be contained by 30. There's a lot of people who are
What's
short- who are
making
short this stuff.
TEUM move?
Yeah. I mean, yeah. They're short them because they need something to short. Well, it's been absolutely wrong. I mean, the short side has been incredibly bad. Remember, people used to short all the time?
It's painful right now.
Yeah, really painful. You see a lot of these hedge funds in trouble, and one of the reasons why they're in trouble is when you explain having run a hedge
Did
fund,
gap up,
you'll
so
get
that's
these guys
good.
employees say, hey, what are you short? And it's like, wow, I gotta have some shorts. And what they typically short are the FANG stocks because they think they're overvalued. And these companies defying the law of large numbers. They are really defying the law of large numbers. It's amazing. Maybe that law should be repealed. I mean, that's unbelievable. And don't forget, we're seeing the ancillaries going up. We're seeing the Adobe's going up. The Salesforce is going up. People should be buying VMware. They had a great quarter. Nobody cared. Happened to be on a day when people didn't like the high multiple stocks.
We'll keep an eye on that. As we said earlier, IBM and
This is
UTX
good that it started up
down
here,
upgrades. Let's get to Bob Bassani. Morning, Bob.
but it's struggling to go up a little bit more.
Mixed open, still positive on the Dow and the S&P. Just let me show you some of the sectors, and this looks a lot like mid-December. The semiconductors still up there. Retail was positive, just turned negative, but those two have been the market leaders for a month now. Energy, the other big market leader. I'll show you through the ETFs around that, and that really has been emerging in the last month as the new leadership face. Utilities, of course, declining and has been for a while, but I'll focus on that first one there. XOP.
I think it's about to start moving up again.
Up a good, 6-7% since mid-December, and the XNG, that's the second
CHCI is starting to struggle a little bit. Like, the big resistance on there is actually that it just passed.
Home builders, ITB, that is the one that's been doing well all year, was up 50% last year. The retail index up 15% since mid-November. Again, I keep emphasizing this, how unusual it is to see retailers outperforming throughout the month of December and even yesterday.
Okay, so CHCI is just still struggling a little bit.
Especially at new highs is a real breakout sectors in terms of new highs. So if you look at the new high list just this morning, you've got a couple of big industrial names. You have United Technologies and Union Pacific. You've got a smattering of material names like Nucor, one or two other steel stocks. You've got one or two home builders at new highs. What I'm sort of waiting to see is it would take a while for some of these energy stocks like EOG to really break out. They did today. Chevron did last week to new highs, but they were hit so badly that it'll be a while before you get a lot of them on the new high list. So not a very strong pattern in terms of breakouts. Cold weather stocks, well, you know the story here. This always happens whenever you see a breakout of cold weather. You get companies like Columbia Sportswear, close to new highs. Canada Goose, which had a great year last year in their IPO, did well. VF Corp, that's North Face, VF. They always do well. That stock was up. What doesn't do well, what hasn't done well, interestingly, you usually tend to buy generator companies like Generac or Briggs and Stratton. They're out there. They make engines for outdoor power.
Okay, so we need at least 2-cent movement on there for do 636 shares on TUM. And it looks like it may be a good one. CHCI is starting to struggle pretty good, so
The big debate right now is what goes on now that we've got the tax bill passed. What happens for the markets overall? The street is still pretty bullish right now. The story is very
for all
simple.
it's on a downtrend, but today it's up. And it's at a 100-day high, gapped.
2018, everybody's talking about what, if any, boosts we'll get from
I'm gonna close that one.
plans. They're talking about modest wage increases above what we're seeing.
Okay, we got about a minute and a half before we may even go in there, because it looks like it may bounce off the stochastic to go down a little bit in just a second.
We're down to arguing about high valuations, and that's true. We're at 19, 20 times forward earnings, but you can stay there when you get a global economic expansion and record earnings. They're talking about exogenous events, like problems with North Korea or some other issues that are out there, or a terrorist attack or something. But we always know that. We're living with that now. And they're down to arguing about inflation. But a lot of people believe that the relationship between economic growth and inflation has been somewhat broken. I'm not saying the Phillips curve doesn't exist, but a lot of people think it doesn't have the influence it had anymore. So the whole inflation argument with an expanding economy that you normally get,
Here's the X
even that is somewhat muted right now.
of the stochastic
Before we get
for it to bounce down a little bit.
We're going to talk about the ETF business in 2018 in the next hour. Take a look at that. Right now the Dow is up 34 points. Carl, back to you.
Thanks so much, Bob Bassani. Let's get to the bond pits as well. Check in with Rick Santelli at the CME in Chicago. Good morning, Rick.
Good morning, Carl. So many markets, so many fascinating moves. We have a lot of charts, so we're going to move quickly. March of 2017 for 10s. Keep in mind they're at 244 right now. down 2 basis points. We can clearly see here that 263 high to the left of your chart there, that is the key, in my opinion, to all of 2018. And below the market, boy, there's so many levels. Low 240s, 233, that was the average price between the high and low yield for all of 2017. A lot of wood underneath, not much on top. If we look at what's going on in Boone since mid-September, we have 2 tops there you see on your chart.
Okay, here may bounce back up a little bit.
But it is hugging on top.
The MACD though looks like it wants to form its X soon, so we may have to wait.
Trading minus 62 basis points. But that July start shows you it is lofty considering where it has been. Remember all the nervousness regarding the HYG, the high yield ETF, when it was trading down at the lower end of its range in November? Let's start it in November. Listen, it isn't skyrocketing, but it's definitely welcoming a new year with upside, and that really speaks volumes about the rest of the markets, whether it's the equities or more confidence in where current yields are trading. Not a lot of nervousness in the fixed income market in the U.S. If you look at foreign exchange, this is really interesting. Now, this is a 20-year chart of the euro versus dollar. Remember all the exchanges we did saying 120, 120. Well, there's 120, okay? And it isn't the first time. But in the broader context, imagine a line at 120. It just slices all the action over the last 20 years. This is a huge level, and the euro looks quite bullish against the dollar. Looks quite bullish against the yen. If you look at a January 2011, or basically a 7-year chart, finally we'll finish out with one that doesn't look very good for the dollar either, and that's against the Chinese currency, the yuan. Now, we talked yesterday about how it was trading down. Today, it's bounced just a little bit, but January of 17 clearly shows the dollar is bouncing along the bottom in that slow-moving relationship with the Chinese currency. Carl and Jim, back to you.
All right, Rick, we'll see you in a bit. Rick Santelli.
Everything's exciting. I agree with you totally with Europe. Feels on fire. Don't get in the way of that shit.
It really is. What Byron's point this morning was how Brexit actually brought the EU closer together.
Wasn't that a great point? Wow.
18.
I love what Byron said. Brady, not Byron.
While we've been listening to Rick, S&P has crossed 2,700 for the first time ever. Oil above 61. When we come back, McAfee's out with a list of potential technology threats for 2018. We'll talk to Chris Young a little bit later on. Don't go away.
In the meantime, I'm still looking at other stocks to try to see if anything comes up in my scanner, as we're just waiting right now. It's really important to make sure that we wait for the right time. We don't just blindly go in, so that way we can try to make as much profit as we can. Because right now, like, when we saw this going up, I could have bought in, but it wasn't hitting the 45-minute mark yet, and we wanted to wait. Right now it looks like it may try to come back up. Even though the X is formed, it's struggling to go down, so that's a key thing. Always keep in mind, if the X forms and it goes down pretty good, then it's a good sell, like short sell. But if it forms the X and it struggles to go down, then we can get ready for it to turn around. As we can see, to try to confirm that is the stochastic here. The red line at the bottom is the 20. We can see that it may bounce back up, kind of what we predicted when it was trying to form, was about to form the X on the right above the 80. So we can see here it may try to go back up. It is breaking down a little bit. That's okay. Now it's trying to form a little bit more better for the downtrend, but still it may bounce back up in very soon. 15. Kind of a support is right at the 11, so I don't think we'll get there, but 5 minute it is technically on its downtrend right here with this candlestick, but and you can see like this one is smaller than this one for the histogram box.
So that was back in the 90s. The Arch Deluxe was a infamous flop for McDonald's, but the fast food giant is giving it another shot.
It did reach 11, 10, 8. Wow, it broke down.
The new offering with
Okay.
fresh beef is being tested at a handful of locations. They test things all the time, Jim.
Yep, I remember you going there. It was fabulous special, and I think that Easterbrook.
Couldn't hold the breakdown yet.
What can I tell you? I love when I was punching at 210. That was my staple, the Arch Deluxe. I mean, okay, that thing was great. I don't know how that thing failed. I think it was all the
There we go,
styrofoam.
broke down.
But this is something worth watching because McDonald's is doing. They're doing vegetarian burgers. And McDonald's is trying everything, and it does. They don't need to. They're doing so well. The dollar menu is fabulous, and I love their coffee. I mean, I think
Couldn't sustain the down.
of their coffee.
And as we always say,
Kind of like a
McDonald's,
support right there,
is
so.
so levered to employment. Their breakfast menu is so key to whether or not people are driving to a job in the morning. And breakfast has a pretty fat margin.
Oh, I thought it was how much you drank the night before.
There's that too. That's a separate
Saturday night game always leads to
positive externality.
But I talked to him about with Easterbrook. He thinks that's hysterical.
Can we draw that line right here? This is kind of like a new resistance, like a downtrending resistance, and it just started on the opposite side right here. Kind of try to help form the X down here.
He's a man of great mystery, by the way, because every time I speak to him about why it's doing well, he says things like
Okay, now we're just waiting for to start turning around right here. Looks like it may do that here actually.
No one really talked about that as a pressure.
from our San Miguel. Jeez, wow. I mean, this is a big hike for the two. It's amazing that both
Let's
coasts,
see that turnaround right here.
both coasts are having problems with state and local. President Trump, it's not really talking a lot about that. But maybe that's fake news when I say it.
We'll find
Is it
out.
fake?
Yeah.
Is my tax return fake? I wish it were fake.
When we come back, we'll get stock trading with Jim. As we said earlier, record high for the S&P 2702, and the Dow's up 40.
We have to, let's see here. Okay, it's back up, like it's climbing back up, but it hasn't formed the X yet. It looks like it may help it to go back towards the zero, which is great. But we also gotta see right here. It's also a resistance. Plus we need to see the X to confirm the buy on the MACD before we go in. We want the X to confirm the buy-in, otherwise we may be going into a losing position, and we don't want to do that. So we could have been in this up right here, but without the X, we wouldn't, like, you can see that it's struggling to go past here. So the X, once that forms, it will help confirm that it will go above my line that I drew here. Looks like it might do it here very soon. Struggling though. So the stochastic has been going up. The stock has been kind of struggling. So that's a key part to look at, as well as you may remember me talking about on the to watch it for a downtrend. Now we watch it for the uptrend. Now we can see, yeah, it's been going up on the stochastic, but the MACD's been going down. So and the price of the stock has been struggling. So that's also been a sign for nope. This one maybe struggling too much.
Basically said, hey, listen, you know, ESPN, don't worry about it. They're doing a lot of stuff. Fantech's good. I think that this is the new narrative. People will forget that ESPN may be losing, and we'll start looking at how the over-the-top and baseball's doing, and how football's doing, and how all these other sports that they have doing. I've continued to like Disney the whole way. I've liked Bob Iger the whole way. I have not been shaken out even in '93. Bob knows that. And I think he's doing it amazing. That's true.
Yeah, so please guys, you know, if you have any questions, feel free to ask. I don't mind answering any questions that you may have while I'm trading. I'm here to help you guys, help make some money and help understand, you know, how to trade and what you're watching out for.
Would have nothing to do with me. Nothing to do with me. He said nothing.
What's on Mad tonight, Jim?
Still upset about that. My body. This is my wife does. My wife ever gets back to me. You gotta follow my wife on Instagram. She's going nuts. She should stop tweeting. I'm on Instagram. She's an instant desperado or desperado. But anyway, MindBody is a company that makes it so that if you want to spin, if you want to get into a class, you can.
The histogram on the 1 minute chart is trying to go back towards the zero, so this is good for us.
And I gotta tell you, it is great to have you back. And wow, we didn't. I think we got most of the S&P bottom. Maybe left out about 40. Maybe like 7 companies.
Lots of buyers at the 17, as you can see.
When we come back, a lot more on another historic day for stocks as the S&P crosses 2700.
Right here. The side, yep, it's about to, there we go, it's at 18. Trying to go to the 19 right now, right here, but it's struggling. There's lots of sellers. You can see right here at the bid ask size, right here on the right hand side. That's the sellers trying to wait. There's lots of sellers at the 20. Now we're just jumping up. So it looks like it may form the X here. Stochastic is kind of high though, so we have to be careful. It did do its break up and then right back down. So it's struggling to go past that right now. So what we're waiting for is we need a confirmation. So in about 15 seconds it could give us a confirmation on the 1 minute chart, but then in 1 minute and 8 seconds it could give us a confirmation on the 5 minute chart. Confirmation, what that means is right above the line, it needs to start. The candlestick needs to start above my line that I draw. And that's my confirmation. So as you can see here, the histogram has been going back towards the zero. Looks like it may form the X here soon. We got about 30 seconds. So it's struggling with this confirmation. It's like a mini confirmations, trying to decide, am I really going to go up or am I going to go back down? About 15 seconds is the next candlestick starts for both. 1 minute, it's saying no, not yet. Stochastic, it looks like it may be bouncing down. It's forming another X here to bring it down. It's trying to form it anyways. 310. That's what I meant to do. So 9-cent loss would be $67 loss. But if we can watch it go from 319 to the 330s again, that's 60 bucks there. So the loss and win ratio right there is terrible. So we would be cutting our loss a lot lower, quicker. Sorry.
We had a 1.4. 1.4 was a strong number. That's now 0.9, but still.
And it didn't give us the confirmation there. So let's see if we can find any other ones. This one's going up. Oh, but it's been pausing right here. So that's dangerous. So I never trade in stocks that pause or and resume, because I never want my money to be stuck there.
When you had a 20-year high at 61.4. So these are super solid. Let's dig down a little bit. Prices paid 69. That's a big jump from 65.5. New orders 69.4 versus 64. And considering it's employment week, employment was the only laggard. 57 versus 59.7. But all in all, really good numbers to start the year, pretty much just like the equity markets are starting the year. Carl, back to you.
Wow. All right, Rick, thank you very much, Rick Santelli. Good Wednesday morning, everyone. Welcome back to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli, Melissa Lee at the New York Stock Exchange. David and Sarah are off today. Hat trick on record highs across the board for the S&P, Dow, and NASDAQ. S&P crosses 27.
Okay, so now it's struggling to go down on TEUM, and the stochastic has been going down. But it's struggling to go down, so that's actually good.
Also, Bill Ackman making a big bet on himself, why the hedge fund manager is so bullish in the new year.
And the U.S. facing a deep freeze with record low temperatures and sub-zero wind chills. Businesses closing and flights canceled. More on what to expect.
Markets are continuing their rally into the new year, trading the S&P, as we said, 2,700 for the first time ever. Dow and the NASDAQ also hitting all-time highs. For more on this, we're joined by PIMCO's Executive Vice President, Portfolio Manager Tony Crescenzi, as well as JP Morgan Global Market Strategist Samantha Azzarello, both here at Post 9. Morning, guys.
Morning.
What a way to kick off the new year again. This new order number on ISM, Tony, best since 04. Is this how the year is going to look?
Well, a key thing we had in 2017 was to be optimistic about the economic outlook, but to not give up.
All right, and AMD, let's see here.
Sure, there could be a cyclical bounce.
Looks like it's trying to form an X
Barring a productivity miracle, it's
here
not
soon
growth will stay high for a prolonged period of time. So we would
to
project
help buy.
growth perhaps in 2018.
But stochastic is high.
Again, because it needs to be productivity led. It's not going to be led by the numbers of new entrants into the labor force and so on and so forth. We need more investment in the United States. That's what tax reform was all about. But it remains to be seen whether or not that will ignite.
Galt is up, formed an X here.
Is this Tony's narrative basically correct?
It's at therapeutics.
You still had a huge anchor around your ankles?
So I'd agree with that. I mean, with clients always we have to toggle between the here and now and what returns are going to look like for the next 2 years versus
No
the
news on
5 and 10
there.
year, which is arguably a little more negative. But for 2018 and 2019, we think these trends continue. Growth, earnings recovery, international markets have a lot of room to run. So there are reasons to feel good. The tax package is part of that.
Volume is really low though on
Longer run
Galt.
asset allocation, a little bit more hesitancy there with returns.
Why are you so reluctant, Tony, about growth in 2018, saying that it will peak when we could potentially see a lot of capex? We've already seen business loan growth really come to a halt in 2017. Right. So there is some notion that there's pent-up demand for borrowing.
It is, so TEUM. It's about to bounce off the 20 here and still been struggling to go down.
Nominal growth in the world would be 5.5% plus or so, which is pretty solid. In fact, it was over 6%. The IMF and PIMCO would call for 6% again in 2018. And the peak doesn't necessarily mean reversal to a recession. So we're not calling for anything like that. It does look like recession is some ways away.
The histogram on the 5-minute chart's been going down though.
Stopped by a number of things, including, who knows, this year the Federal Reserve could become more of a factor in markets than many expect, with many looking for 3 rate hikes. But what if it is 4? We wouldn't say that would put the economy and markets over the cliff. So it may be a peak, but it doesn't mean the end of the world. It's simply good news, but watch out in terms of the factors that will that are necessary for good long-term investments.
Samantha, one of
Cone.
the things that is a feature of this market at the start of this year is that people
Nope.
generally agree things look good. So I think that's a little bit of a shift from past years. I would say
Right here.
6 or 8 months since the mantra has been global
Trying to raise
expansion,
back up.
Stocks have great momentum. You're being paid to take risk. Is that going to continue to be the case? And I guess when tax reform gets filtered through to S&P earnings, as people are now revising their numbers, is the market going to pay up for that, or is that largely accounted for?
We think they're going to pay up for it. Now, the issue is that some of the tax reform is going to be hard-pressed to show in the actual accounting numbers. So it's not just about earnings estimates, but also interpreting those. We don't think it's been fully priced in yet. And if we get the pop in CapEx, which will be supportive to growth in the longer run, that's another, push
I think this is like getting ready to go back up really good soon.
So they're either in the earnings or they're not in the earnings.
I think just with a sense the tax.
That's why I'm
how
still
the tax
watching this
package
one.
Gets, filtered through with what companies are doing, how it shows up in the numbers with some of the accounting and the expensing. I'm not sure it's
There we
gonna
go.
show up in third quarter earnings this
Well,
year.
the fourth quarter that we're going to hear about in a few weeks is going to be a mess. I mean, everyone's taking these big non-cash charges for repatriating earnings and all the rest of it. So it's almost as if it's going to be eye of the beholder. If investors say
25
well,
is like a
I'm gonna
resistance,
reprice this
though.
business based on the lower tax rate, or I'm not.
Exactly. So where do we invest, Tony? Where do we go?
Well, perhaps the single best investment for the year would be the one that is not in current portfolios. So there's another way of saying that there probably will be a little more volatility in markets this year than last year. Again, possibly because of a change in views about Federal Reserve. There is such a thing as too much of a good thing, and being careful what you wish for. We all wanted strong growth. For years we have, since the end of the financial crisis. But strong growth with the jobs rate at 4.1%.
Bounce off the 25 here, so kind of needed to break that.
Near a 20-year high. Perhaps it's too much of a good thing. So the best single investment may be having dry powder, de-risking portfolios. Simply for bond investors, do the little things that bond investors do to make money. And this means don't make bets on interest rates, don't make big bets on yield curves, stay away from these big macro overlays, do simple things. So leave it to your bond.
So you don't you don't mean cash. By dry powder, you mean, cash.
It could be leaving a little bit in your risk budget. So this could mean moving up
24.
in credit card, moving a little bit away from high yield toward investment grade, moving up in the capital structure.
HGSH. Let's check it out.
Strategies, total return type strategies to protect the gains from Look for investments like core strategies that move inversely.
Alright, China real estate, so there is no volume here. Did it pause?
Thematically where you are to not reach as much?
So there's a quality bias, I think, that's necessary later in the cycle. And that's a way
It did pause, so I wouldn't trade this stock because yeah, it's up like 201%, which is crazy, right? But right here you can see it paused and resumed right here. So that tells me the stock will do it again, which means I don't want to get my money stuck in there, and it's already up a lot. So it would be really dangerous to go in here. I don't trade the pause and resume stocks at all.
About a big button that's bigger and stronger.
Because if your money is stuck in there, the reason why I don't trade it is when your money is stuck in there, you have no control. You can't get in, you can't get out. And then if it paused on you, then it could resume at a much lower price, and then you're at an instant loss. So that's why I don't trade stocks that pause and resume.
There does seem to be evidence that North Korea has been cooperating in a sense. Despite the tweets, despite the rhetoric, it does look like things have calmed down, believe it or not.
Obviously, it's a longer-term story we'll watch. Thanks, guys.
Thank you very much.
Looks like it may go to the 25 here. That's what we were waiting on. Stochastic is kind of high though. Okay, 10 seconds till the next 5-minute candlestick, and that may help push it up if it's bigger. Volume is really picking right back up though. It is high up there. Yep, it broke up. So let's see. If we can get in. So 26, 27. See if we can get in at the 27. Okay, I'm in. It's back down. Okay, if it goes below the 25, I really should be watching it. I kind of went in like 1 second too early though, like 1 minute, because it's trying to form the X, and it didn't form the X yet. So I'm a little bit early. So I got in at the 27. And let's set it to get out about 34, 33, 34 is where we are going to shoot for to get out. Struggling a little bit though. Okay, it's at 25, so it looks like it's maybe cutting it close. Didn't form the X. 23, 24, so I'm at a minus like $30. But it bounced back up, so I was about to get out, but it bounced back up. Someone bought 10,000 shares. So right now it's kind of bouncing between the like 24 to 27. We're okay so far. It's really struggling to go down. So I just need to watch this really closely because it is cutting it close for where I should be getting out.
Ongoing anti-government protests in Iran as well. Such respect for the people of Iran as they try to take back their corrupt government. You will see great support from the United States at the appropriate time. That's after a tweet storm yesterday addressing Pakistan, Israel, Palestine, and even mocking North Korea nukes. We're joined by George Friedman this morning, founder and chairman of Geopolitical Futures. George, it's good to have you. Thanks for your time.
Thank you.
Handle North Korea first. I mean, these things heat up, they cool down, they heat up again. But your point is that basically the overall dynamic has been pretty static. Is that true?
Yeah, particularly on the part of the United States. The president has not engaged the question of what to do, and his critics haven't engaged the question of what to do. And they focused on his jokes. So the real issue is this. Since Clinton,
it is kind of close right there.
Policy, the idea that they would not accept a nuclear North Korea. We now have a nuclear North Korea.
If it goes below 23, that's when we should probably get out. But
do about it? And everybody has been
that became a support. It may be struggling though, because it looks like it may work its way down.
About 30 days away or so. Carry some kind of event risk or not?
23. Come on, bounce back up.
Intention of hurting South Korea. This is their opportunity to peel South Korea away from the United States, to demonstrate that the United States is not going to come to their assistance, or if they come to their assistance, it's going to be path to South Korea. North Korea is seeing this as a chance to, in a strange way, reunite the Korean Peninsula. And they're not going to hit the Olympics. They want to participate in it. They want to share in it.
At the same time, George, how do you interpret the chess game that's going on? I mean, North Korea and South Korea, it seems like things might be on track to having some sort of talks. North Korea certainly made the overture by using that hotline. And at the same time, President Trump comes out with this tweet, which is a really hard to
Lots of sellers at the 25 though, so that's kind of scary.
Well, the president's joke said the United States has a much larger nuclear capability than North Korea. That's true, that's obvious.
Second red, and looks like it may be forming down here though.
Isn't the point. The American policy.
So there we go, it broke down, so we need to get out. We're just going to take the loss.
That could reach the United States. At this point, the word is North Koreans don't have that because they don't have the guidance ability yet. But Mattis and others have said that if they develop that, the United States is not going to permit it. So we're still in the situation where the American policy officially is that the United States will act
I'm gonna
North
take the
Korea
loss there.
from developing this, and they hope that the North Koreans don't do that.
Yeah, we're
At
out.
this point, either they couldn't,
Well, that's unfortunate, but that's okay.
they chose not to. But we don't know what the negotiations are. But there are serious negotiations going on between the United States and North Korea.
So let's review this for a minute. Why I lost. So the $67.17 there said I lost. So let's review this for a minute. So here's where I went in, and I called it that I went in too early because it didn't complete the X. So I have to wait till it makes the confirmation of the X, and I didn't wait till it formed the X. It looked like it was about to, so I got in early. So that was my mistake. So the key part is make sure we wait and make sure the X on the MACD is formed. And I'm happy I went out because it's dropping. Even though it took me a second to get out.
Distinguish what this president says and what he does.
It's really important that we get out
When the president says something strange,
when we see it go back down.
it's a crisis. But we should
So yeah, I lost the $67 today, but let's see here.
in fact, he hasn't backed out of any of the traditional
314. If I would have stayed in, I would have lost another extra 30 bucks right now.
But how long would you expect that to continue
So
if people decide that
we have to make sure that we cut our losses as quickly as possible,
without consequence, right? Why does that not turn him
especially
into
when we're building like a new account like this. It's really important. It's unfortunate I couldn't get out at the 20 here. I had to get out at the 18.
So he can say things that others can't. But, you know,
So now it's dropping more. 12.
The idea has been ever since 2009 by the old president that the Iranian people should rise up against.
So I would have lost wow, it's dropping like a rock. So this is why we get out as fast as possible. $143 loss I would have had if I would have stayed in.
So, I mean, we're not really looking at much different actions. It's like going to a businessman and hearing his press release.
162. I would have lost 100 more bucks if I would have stayed in.
You may want to take a public position.
Super important to make sure we get out
you believe the markets,
as fast as possible.
financial markets have correctly priced in really his tweets and the way he tweets from the get-go?
Yes, so when the volume remains high, yeah, it helps with moving the stock a lot, Mr. Sims. Let's see here. Around 9 o'clock my time, so Mountain Standard Time, is when the volume really slows down. So usually you don't ever see me trading past 9 o'clock because the volume is just incredibly low compared to the first hour and a half.
United States, but remember they were appalled at Obama. They were appalled at George W. Bush. One of the things that the world loves to do is be appalled at American presidents. This one more so than others. But it's important to really distinguish what is actually happening and what he's tweeting. In the same way that you don't take a presidential press conference.
In the meantime, we can also look at, since we know why we lost, because I went in too soon, you know, didn't form the X, so we know why I lost. So we can see, are there any stocks we want to do dividend on? On the dividend stocks, if they don't have a pay amount yet, you know, I don't trade them. First I look at the stocks, see if there's any companies that I recognize. American Express, they're good. Barnes & Noble, they don't have that much volume usually. JP Morgan Chase. American Express. No. Okay, JP Morgan Chase.
The biggest wild card is NAFTA. Republican senators and governors have been seeking assurances from the White House that the U.S. won't withdraw. At one meeting in early December, a source says Senator Lamar Alexander asked Lighthizer to name one senator who supported withdrawing, and Lighthizer couldn't. A GOP Senate working group is convening regularly to discuss the issue, and a White House official tells me the discussion of withdrawing is premature. Even so, the Montreal round beginning January 23rd is being called make or break. And Canada just today is now suing over lumber tariffs it says are unfair. So we will see where this all goes. One thing that people are watching very closely is this Monday when President Trump will address the Farm Bureau Convention midday in Nashville. All of this, guys, is coming as the White House
It looks like
he's
it's trying to form its back up on JP Morgan Chase the last 100 days there. So that's good. So this is a good, so what I'm about to show you guys is it's a good strategy to use if you're out of like day trades and you want to you know, like do a swing trade. Like let's say you work in the morning and you normally can't do the day trading during the most prime time. Then what I recommend is doing like swing trades or like dividend swing trades where you can make some money there. Let's see here. By the way, that stock went down pretty dang good. It's already at $3. I would have lost like an extra 150 bucks. So I'm happy I'm out of that. Let's see here. So for example, JP Morgan Chase is really expensive, right? But they have a dividend. Let's see here. 56 cents a share. So right here I put 56 cents. So with my $2,000, $2,065, I can buy 19 shares at the current price. If it goes to $109, great. I'll make $6.82 only because I have 19 shares. Here you can see for the dividend payout for the 19 shares times 56 cents, it's $10.64. So right now that would be, you know, covering my fees only. So I would need the stock to move up for me to really make anything. So right now JP Morgan Chase would only be really good if I had more money in there. So this one is not worth it, where it just covers the fees. Let's see here, BKS. Barnes & Noble. So right here you can see it bounced off the MACD and it's on its way back up. It is at a struggle of about 690, 696 is kind of where that is. So we could buy into Barnes & Noble. Let's see here though. Let's see how much they pay out. So they pay out 15 cents a share. Whoops, there we go. So 688. I'll just say 690. And $300 shares. 300. They pay out 15 cents a share. So Barnes & Noble, $45 dividend payout. If it goes up only 2 cents, I'm at a loss of $3.90. So the $45 that they'll pay out, it is worth it. So Barnes & Noble, their volume is not the best, but they've averaged about 1 million to at least like about 500,000 to 1 million a day, so it's not too bad. So right now, yeah, this one wouldn't be too bad to go into. So what I'm doing now for Barnes & Noble,
to the snow. The snow's only going to be 5 to 9 inches. People here in this part of
Is
the country can
right
make
here
that
you can
fairly well,
do
and DPW don't
BKS.
have too much trouble with that. It's going to take some work, but
Let's
they can
say
do it. The real problem is going to come after the storm,
BKS.
because we're talking about intense winds, 25, 35, maybe even 45 mile an hour sustained winds.
Okay, why are people trying to buy it at the 85? Because that's the day low.
And into Saturday, we're talking single digit to maybe 10 or 11 degree air temperatures. That's the
Okay, so what we're doing is we do market on close. So market on close means we're willing to buy at whatever the price is right as the market closes. So we were gonna do 300 shares, right? It's $3 over our limit there. So what we'll do is about 295. 295. So $30 difference there. So we'll do about 295 shares, market on close. So whatever the market closes on, we'll buy it for 295 shares. So now this is live. So now we know no matter what we'll get the $44.25. We just need to make sure we get out at the exact same price or greater. So even if we break even. Let's see here. And when do they pay it out? So Barnes & Noble, they'll pay it out on the 26th. So on the 26th, I will receive that $44. So a lot of people get confused with dividend stocks when they see the ex-dividend date of January 4th, that they believe that they have to be in until the 26th, which is not true. You can go in, you have to be in before the 4th, so the latest is today. Okay, and then we buy it today. We can sell as early as the 4th, so we can sell it tomorrow and still get paid out on the 26th because we are put on their record that we are inside their stock. So Barnes & Noble I like to do this on because, as you can see, the price doesn't really move that much. So I'm fine to do that. And then I just sell first thing in the morning. So you guys will, tomorrow morning you guys will see me sell that stock, most likely. So does anyone have any questions regarding towards that?
Cycle now, and I think while athletic wear and athletic footwear is still going to be popular and consumers are still going to want to wear it for comfort, we're just not going to see the growth that we had seen. So I think it's going to be more difficult for them to return to that double-digit growth in North America.
Randy, even if the category is not growing the way it was, I guess, in the past several years, there is a bullish case on Nike that says, look,
is there interest on holding that stock? So that's a great question. So when it comes to interest, you do not get charged interest for holding the stock if you're not using margin. If you are using margin and you hold it overnight, then your broker may charge you interest to hold it. Now let's see here. When it comes to like short selling, as long as you're if you hold a position overnight and you're not using any margin, then no, it's not going to charge you interest. If you are holding with margin overnight with a short sell, yeah, it's going to charge you interest. But then you also have to see with hard to borrow. Hard to borrow charges you a ton of interest. So hard to borrow can charge you interest between 5% to 1,000%. So you could really lose all your money basically that you put in there just overnight. So you don't want to do hard to borrow short selling, even if you're not using margin. So be careful on that. The company, they don't give us interest for being invested in them. It's just more just a dividend payout that they do on the 26th, for example, with Barnes and Noble. Did that answer your question, Antonio?
Randy, you mentioned you like Foot Locker. You also like Under Armour over Nike. So you see that upside, the value there.
Yeah, look, Under Armour had a tough year. Nike had a tough year as well, except for the end of the year where it really ripped.
Okay, great.
Under Armour's brand here to stay, and it's in a very good category of athletic apparel that it's long-term growing, but also has limited competition. It's only Under Armour, Nike, Lululemon, and Adidas. So why play Nike at 25 times earnings, a huge market cap?
All right, let's see here.
Got hurt last year, down 50% with a $6 billion market cap. The market cap today of Under Armour is less than half.
Multiple though on Under Armour is still
It's a little misguided in the sense that the operating margins came down, the sales slowed. If you believe that Under Armour is a long-term grower,
So some question that people may have is, why did I just buy? Well, why did I set Barnes and Noble to buy it at the end of today, and why not just buy it now? The reason why I don't want to buy it now is because the stock may move a lot more during the day, so I'm trying to limit the movement as much as possible with Barnes and Noble. So even though it doesn't do much movement now, I don't want movement on the stock as much as possible. So I buy it at the end of the day, right as the market closes. The volume drops like a rock, where there's like almost no traders after hours for Barnes and Noble. As we can see extended hours. You can see nobody traded Barnes and Noble at all in the before hours. So the non-movement helps me make as much profit off of the dividend that I can. So that way it helps me get out around the same price that I got in. Just keep in mind though, with dividend stocks, we'll see that drop of that 15 cents that they pay out tomorrow morning, and then we'll just sell it on the way back up. So the companies usually take that 15 cents out of the stock first, and that's hence why it's called the ex-dividend date, because that's the one day that they take the dividend out of the stock that quarter to pay its investors on the 26th. So then the stock goes back up right at the beginning of the market, or it can go down, and then you just hold it for a second, and then you just try to get out around the same price that you got in. So right now, like I said, it's just market on close. The market on close option is only available all the way up until 30 minutes before the market closes. So if you are within those 30 minutes of the market closing, then it's not going to let you do the option of market on close. So that's why I said it now. Then what the option of doing this is, I have it set. I leave for the day, I can go do whatever I want, it will buy it for me, and then I wake up tomorrow morning and I just sell it, and then it's basically money that I made overnight that I didn't have to do anything really for. Yeah, so if the stock goes up tomorrow morning at opening, are you going to ride it up till it starts to fall? Mr. Sims asked. So yes, so I will, like, if it, as long as it goes up to the price for around the price that I got in, and I can walk away with profit, yeah, I'll definitely do that. So if it goes up higher than like the price that I get in, then great, I make extra money. But let's take, for example, worst case scenario, I get in at $6.88, the stock pays out $44.25. Let's say I get out at, let's say it doesn't hit the complete 688 where I got in, it only hits up to 685. So what I do is I'll take the initial loss of the $18.75 because of the fees, but I get $44.25 on the 26. So initially I make $25.50 profit, even though I did not get back out at the exact same price. So let's say it goes only back up to 680. Okay, I still walk away with about $11 profit. So this strategy, it's a lot safer strategy than the day trading. It's a lot slower, so you don't make as much money, but it's a lot safer because you still have the backup of the actual stock dividend being paid out. That is your backup. So what I do for trading to maximize my profit and the amount of trades that I can do is, as you guys may remember, I talked yesterday about the trades that you're allowed to do. So right now, you know, because I traded again today, I hit my max of 3 again within the last 5 business days. So I gotta remember next week on Tuesday and Wednesday I can trade, and then if I can trade again tomorrow, great. If I can't, then I'll do paper trading, where I just do it on my Excel sheet. Here's where I would have gone in, here's where I would have gone out. But then I will have that trade for Monday again, because I don't trade on Fridays just because of my schedule of work and stuff. So next week for sure I'll be able to trade Tuesday and Wednesday. But to maximize my profit with the 3 trades, I'll do the dividend trading that you see. And if you're wondering about dividend, like how much they can pay out, let's see here. Let me show you one. Custom time. So let's take for just as an example, January 2017. Let's take it to February 2018. We'll be able to see transaction history. Let's see here.
You can do active. You can do low-cost active management, and if they get that sufficiently.
All right, so we can see here dividend payouts. So you can see Gap paid me out 115 here. Here's some more dividend payouts. Walt Disney paid me 299. Medical Properties Trust paid me 322. Here's another one, 231. Let's see here. Previous page.
Bill Ackman is making a big bet on Bill Ackman. Leslie Picker joins us now with all the details. Hi, Leslie.
Hey, Melissa, that's right. Bill Ackman, along with a group of Pershing Square advisors and senior executives, announced a plan last night to increase their ownership of the firm. Pershing Square revealing a potential.
All right, so here is MasterCard. They pay me $82.94. Here's another one. Here you can see the dividend payouts. Here's 3 companies. So this one, they paid me $200. This one I lost $30 on, mainly because I think they overpaid with the $30, but that's okay. The Tribune, here you can see on February 3rd, 2017, I got paid out $5,850.78 for just holding it overnight. So it's definitely worth it.
2017 for Pershing Square. Ackman took a $4 billion loss after selling his stake in Valiant in March. Then in November, he failed to obtain a single board seat after a contentious proxy fight.
You guys got to see a little bit about my history with my trades there as well. So I just maximize as much as I can. I do the day trading, I do the swing trading, I do the dividend trading. I do as much as I can because there's lots of money to be made in the stock market and lots of different ways to do it. So there's not one perfect way to make money. There's lots of strategies that you could do. You could even like watch how I do my strategies and then create your own, which would be the ideal. Let's see here. So we can see it's not really moving much. So I kind of like this a lot. You can see here where I got out with the other stock. Let's see here. TEUM. Where I got out at the 18. It still hasn't reached back out. So I got out right at this line. So it's really struggled. And it had dropped all the way to 297. So let's see here. Let's actually figure out how much I would have lost. So I got in at 327. I did 635 shares. Let's say 297. I would have lost at 240 bucks if I would have stayed in until then. So I'm happy I didn't. Yeah, I went back up, but you never know how far it's gonna drop and when it's gonna come back up. So it's better to just cut your losses quickly. Plus, I would still be at a bigger loss right now than I had. So I'd be at a $130 loss right now if I had stayed in until right now. Which, again, I only lost $67.
Should you buy into these stocks? Good question. Find out the answer at tradingnation.cnbc.com. More Squawk Box.
Also, like worst case scenario, let's say Barnes and Noble. I don't get out tomorrow. Let's say, you know, the stock is a little bit too low still for me to walk away with money. It's still on its uprise right now, so as long as it's on the 100-day chart still like on its uprise, then I'm fine to stay in. So I can, like, the longest I think I've stayed in for a dividend trade is maybe like 2 days, which is, it's fine. You know, you can stay in there as long as you want. It's not going to charge you anything, and if you can guarantee to walk away with money, why not? So especially if it's like you hold it and then you sell it, let's say on Friday or Monday morning, that's fine as well. I mean, it is Wednesday, so 2-3 days holding, just fine.
One step closer to being listed publicly. Axios reporting that the company in December filed confidential plans for an IPO. Now, Spotify has been in the process of doing a direct listing. This would be a non-underwritten.
Alright, so right now I'm really open for the next like 15 minutes of like any questions or concerns that you guys may have, like strategies that you guys want to do or have questions about. If you have stocks that you're looking at and not sure if you should trade it, you know, let me know. I can definitely look at them as well with you guys.
Reluctance on the part of Spotify to kind of play the game of being a public company.
But they're saying Q1 listing, which is interesting given the timing of the lawsuit that came out yesterday, right? The copyright infringement. So,
but already one of the best capitalized private companies in Europe, right? And has been for a long time. And it seems like the private investors, they have
provisions that are basically forcing the public listing. But yeah, you have to figure most of that will be one of the risk factors listed.
So here, it's pretty cool. Spotify has filed for IPO. I never trade IPOs as they come out because they're very dangerous because there's no like support resistance. But it's still pretty cool.
Thanks for taking the time.
I had that in my earpiece, but I don't know what's going on. No, I got
All right, that's okay, Bill. Okay, Bill, you wrote an article in American Banker.
Alright, let's see here. Someone just bought 278,000 shares of AMD. 278,000 times. So they just barely bought $3.2 million worth of AMD. Wow.
We're going to have to go back to Mike. We'll come back in a bit with Bill Isaac.
All right, we hope so. We're going to take a quick break. Squawk News will be right back.
Or do I keep all that cash money under your mattress? Secret offshore accounts, banks? So that's a great question. No, I have a lot of different accounts that I use to trade with. So I do a whole bunch of different accounts, mainly because to get around the pattern day trading rule, when I first started, I created like 6-7 accounts, like mainly with like E-Trade, different brokers, so that way I could maximize my profit by trading as much as that I could. So you'll see a lot of my money just in between other accounts. As you can see in the history here that you were watching a minute ago, usually I trade with a lot more money, but you know, with starting with live streaming, I thought I'd start with a lot lower, so that way I could show you guys how to really trade. Here you can see me trading with 50,000, 30,000, 40,000. So I like to trade with a lot, but plus I like to spend money as well on my car. I bought a brand new 2017 2SS Camaro just on October 31st. So it's fun. 455 horsepower. I don't do offshore accounts yet. Maybe in the near future. Yeah, I'm happy I took the loss on TEUM because I stuck with the rules there. What about paying taxes? So that's a great question that, you know, we never went over, so thank you for bringing that up. So the way that taxes work is you do not pay taxes on your stocks. And just keep in mind, guys, I'm not a tax advisor, so you know, I definitely recommend talking to a tax advisor who can speak more about it. I can give you what I do personally, but again, speak to them about it. But tax, when it comes to taxes and stocks, you don't pay tax. I don't pay taxes until the end of the year, so you know, I never get a tax return. I have to pay taxes every year, so usually, on average, you know, stocks are about 15% of your profit is what you pay in taxes. I think dividends are a little bit more, but I'm not 100% sure right now, because they may change. They have the ability to change that every year. If you lose money on the stocks, I believe, again, don't quote me, I'm not a tax advisor, but it can become a tax write-off.
So it's really, to me, a really serious problem.
And then you get a little bit back.
Now, Mr. Mulvaney has taken over head of that bureau. Do you think that will make a difference, Bill?
I think it will, and I certainly hope so. I believe that we need to do a lot to get the financial system to be responsive to the needs of lower and middle income people. It's really dangerous right now that these people have been shut out. 2/3 of our citizens have been shut out of the credit system. We've got to fix that, or we're not going to have a very sound economy for very long.
All right, let me go in another direction real quickly. Freddie and Fannie, they're like the engine light that's on, but your car keeps running, so you ignore it. Are we ever going to address the functioning of the GSEs? Just because they're ignored and they seem to be humming along a bit, that doesn't mean all is well.
So again, this is staying around the same price, so this is kind of nice.
There's no doubt about it. We had put off this.
In the meantime, we can check out other stocks. Let's see. Disney has been on the news today pretty well. So today, Disney is on its way back up pretty nicely. It's making another X, so it becomes buy-worthy right now for if you hold it for a short time. It did has the confirmation right here that it's trying to climb up, so that's nice. Sorry about that, guys. I guess my OBS stream program got closed and reconnected by itself, so I apologize for that. So let's say you start off with $100 compared to $200. Well, with $100, you're definitely not going to be doing your day trading that I am, because your $100 are going to be eaten away by the commission fees. So you don't want to do day trading. So what you're going to want to do then is definitely invest. Like if you have $100 only, you're going to want to invest into a company where they pay out dividends and you can see a good movement on there, and then that it's also like a cheaper stock. So it has to be a really good stock though to help move. Otherwise, you may have to find like a penny stock which can jump up like crazy. For example, a stock that can go up 100 to 200%, that can really help you. That is about like 50 cents a share. So something like that may be beneficial for you. But usually those companies, they don't pay dividends when they're that cheap. So just be extremely careful. I personally recommend always trading with minimum of 2,000, no lower than 500. 500 is my cutoff. I don't ever want to trade below $500.
Working to kind of manage this issue with vacancies and some retailers that have gone into bankruptcy here. So do you think that you are just free and clear of those issues, or the industry in general is not going to feel this kind of pain?
I think it's both. We've done a lot of work in terms of dispositions, and we're also using this as an opportunity.
Alright, and I am keeping track of my progression this year on this account, so you can see what I'm doing.
Only 25% of our leasing for the first 3 quarters of 2017 was with traditional apparel. So we're really transitioning the types of uses at the mall, and it's really happening not just at CBL, but across the industry.
Right. Dana, how would you characterize how the anchor tenants in mid-market malls are doing? That's where CBL is really focused.
I think overall, I think overall what we're seeing from the anchor tenants is they're reinventing themselves. And I think there are going to be different anchor tenants. As some anchor tenants have closed, whether it's bringing in experiential tenants like restaurants or like movie theaters, or department stores reinventing themselves. I think we're going to hear about more department stores expanding the categories and diversifying their categories of use. So there's change, and the weakest retailers are the ones who
yeah, so penny stocks are extremely risky. So great question, Antonio. So penny stocks, they can make you a lot of money, but they can also have you lose a lot of money. So penny stocks again are risky. I like penny stocks. Usually, like penny stocks that I look for are pharmaceuticals or therapeutic companies that either have like phase 2 or phase 3 completed. They got FDA approval. So that's why you see me look for news, and I'm looking for that. That's why you'll see me do these sectors right here. You'll see me under the biotechnology. Here, just looking under pharmaceuticals, trying to find some, like here's a pharma. Here's some more pharmaceuticals, VRX. You got Deva. So you'll see me do a lot of those because those pharmaceuticals are not too bad for making money, because they can really jump up like as soon as they have one of that kind of a news, like for example, like, oh, they got FDA approval, then their stock can go up 50 to 100 to 200 to, I have seen 300-400% on pharmaceuticals. So it's definitely worth it to watch for those for your penny stocks. Other penny stocks are extremely risky. I don't normally trade other penny stocks unless they are pharmaceuticals and therapeutics and have good news. So you just be careful on there. Like the penny stock that I did today, TEUM, they didn't really have that good news, you know, and it was kind of more risky. So today was a risky, so I knew that before I went in. So luckily, again, like I mentioned, you limit your losses as much as you can. So I got out at the 18. I was trying for the 20 to only have a 7-cent loss. Instead, I had a 9-cent loss. So, you know, just make sure you're cutting your loss as quick as possible with penny stocks. One thing I could have done to help me get out at the 20, I really wanted to get out around the 25, but it was kind of, you know, staying around that place for a little bit right here. So that made me not do this, but I probably should have, and I should have just set up a stop loss. Say, hey, if it gets me out, let's say stop unquote, I could have set it up at $3.22. So as soon as I hit that, it could have gone me out at that price. So that would have saved me a little bit more money too. So that's something I definitely recommend for penny stocks, is make sure you're using your stop losses to get out. Alright guys, and then for those who are new, make sure you subscribe to this channel. Check out the website of our company. It's called KNKstrategies.com. Check that place out. We'll be doing a lot of stuff on that website. DVDs will be for sale soon on there. I'm just working on that right now. Definitely check out KNKstrategies.com. Subscribe again to this channel. Tell your friends, family, if they want to make more money, if they want to learn, or if they want to watch, if they've ever had some kind of interest in there. I'm always open for any kind of questions. I'm always open to, you know, see where you guys are at and try to help you guys make some money. So that is my passion that I have with this, just to try to help people make money and be successful on there. So again, I will be back tomorrow morning. If you guys have any stocks from now to then or questions, make sure you write them down. Send them to me, and I can definitely go over that with you guys. Other than that, I am going to end the stream here right now. It is 9 o'clock, so usually I do not trade after 9 o'clock because the volume stops. As you can see here on TEUM, the volume really has dropped a lot compared to here, so I do not trade low volumes. So it would be harder for us to get in and out, so that's why we don't do that, and a lot less movement. But I do hope that you guys have a great rest of your day, and I'm excited to speak and trade with you guys tomorrow. Have a good day. Bye-bye.